I thought what we did today was really nice. I really like what we did today. All right, we're going live on we're going live on YouTube. Now we're going live on Facebook. Okay. All right. Think I need a shave tomorrow. We're moving all of it. All right. We're good. We're live. We're good on YouTube. We're good on Facebook. We're good. We're live. Ladies and gentlemen, I'm actually going to show you how to nail the top of the entire market. No Captain Hindsight stuff. We'll show you how to actually do it looking forward. We're going to go over earnings in particular Square, and we're going to show you so much more, including a new strategy that we've been executing upon. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. I have so many great things to show you today because we use really statistically, phenomenally, algorithmically accurate levels, and we're going to actually show you and spoil you to see could have you nailed the top of the entire market. What if I told you you could have done it just by watching the Newsbeat show yesterday or being part of the Newsbeat live room? But we're actually going to show you how to do it. So we're going to be bringing you some value there. We're going to go over Square earnings and what I think is actually happening with United States companies here. And I'm also going to spoil you and show you a little of what we traded today in terms of our new Bandito strategy. But first, before we get all into that, by watching this video, you are agreeing to hold me, Mark Melnick, harmless and not responsible for anything that includes T3 Live. Harmless and not responsible for anything that you might see, hear, think you heard, think you saw on this video. By continuing to watch and not leaving immediately, you are already agreeing to those terms. Thank you so much for agreeing to that. So, we're going to go over some things here today. Let's start off with how to nail the top of the entire market. I know you're probably already done hearing it. Mark, you say that every single day. How do you do the top of the market? I keep hearing it and hearing it. Well, what's happening? Well, if you look at the spider level right over here, spider resistance from yesterday, this was on the Newsbeat show. We give you tomorrow's levels today. So today we're going to give you the levels for May 2nd. Today's May 1st. We gave you 294.92 on the spiders. Now here is another beautiful thing about the spiders over here. We actually, where is that tweet? We actually showed you in real time. Oh, I got to respond. Wow, you nailed it with that one today. Yeah, I sure did. We actually gave you at 11:44 a.m. Eastern Standard. You got a tweet which is alerted to your phone and/or email. However you set up your Twitter preferences, this service comes to you free. It's not a separate charge service with your T3 Live Newsbeat subscription. 11:44 a.m. 294.92. Let's see what happened. So we're going to take you in real time here on the spiders, 11:44 a.m. I figure we'll look at a 1 minute chart. Let's be as accurate as possible. Let's not be loose. And there'll be a lot of people out there who will say, "Oh, you don't need to do this to make money." The truth is, you could do a million things to make money. I'm just showing you one of the things that people in our room use to make money. So imagine right over here at 11:44, right over here, that you're getting an alert at 294.92. Look what happens right here. The top of the spiders on the day. A minute later, 294.92 before just absolutely plummeting. Nailed it perfectly to the penny. And the spiders just went down, sold off like it was no one's business. You know how many traders must have gotten surprised at that down move today? Everything looked bullish here, didn't it? Like if I showed you in real time what was happening, we tweeted out at you right over here when it looked like this is when we tweeted out at you at 11:44 a.m. Again, you can't make this up. Here's the timestamp for May 1st, 11:44 a.m. I'm going to show you how we did it afterwards. So stay tuned. There's going to be a lot of value behind this. So right over here, When the spiders are between 294, 82, and 89, we're alerting you on your phone, on your email, in the room, in the chat, on the audio. We're alerting you actually in five different ways. It's inside our announcement window. It's inside the chat. It's inside the Twitter feed. It's sent to your email and or it's sent as a text message. Five ways actually that you get this information. So whether you're busy at work, you get a little alert, spiders, resistance coming right here. This is what happened afterwards. Look how it panned out. Kind of amazing, huh? Kind of amazing how it just dropped, hit it perfectly. And then magically, the Fed was speaking today and the spiders decided to go all the way back up. Look at that. And the spiders went all the way back up. And it hit 294.95, broke the level again, but now by 3 cents. And then plummeted. So, how do we do it? I know for a fact there are other forms of technical analysis out there, and anybody could be kept in hindsight. Look, any person could justify it in hindsight. I'll give you an example. I have pivot points right here. I could say, oh, it hit R1 resistance right there and then fell. I could have saw that a mile away. And it's like, yeah, you could say it a mile away after it happened, but in real time, would you be the person shorting the spiders up there? The Newsbeat live room, there are hundreds of people shorting the spiders up there. And let me show you exactly how we did it. I know it's going to seem magical, it's going to seem complex, but I'm going to delete all these lines because, you know, we teach this in our Algo Trendline course, but I'm going to just show you today. What if I told you to nail the top of the entire market? You just go on a daily chart of the spiders, you draw a line connecting February 25th. See the February 25th right there? And you connect that right here to April 23rd. February 25th to April 23rd. And you get the dead high of the spiders. It hit it to the penny and plummeted, came back up again, broke it by 3 cents, and then plummeted again. Those spiders after hours right now are trading at 291.47. Those spiders dropped 3.5 points off of the level that we gave you yesterday. And when I say these are algorithmic trend lines, what I mean is by drawing the trend lines in the way I do it. Many people think they could draw a trend line, and most people draw a trend line like this. They're like, all right, they'll draw a flat line, be like, there's support, and or there's resistance, and it'll be very sloppy, but it'll be a generalized view of where a stock could bottom or top out. Algorithmic robots are very precise to the penny. That's why it's very important to understand algorithmic trend lines. This is really my life's work. Again, people are shocked to hear that I spent over 60,000 hours developing this, and it's respected and used by a lot of the top, let's just call it the top people who run robots today. So when I'm coming to you and I'm showing you this, there's a reason why we come to you every day and be like, look, I nailed the top of the market. Oh my God, he's at it again. But I'm going to show you tomorrow's levels tonight. So what does that mean? I either have a time machine or I know what the heck I'm talking about. One of the two are true. So when you see something like this, all you had to do is draw that line. Now I know what you're probably going to ask. Why that line? Why not a different line? How about this line? How about that line? Why did you decide to use that line? I teach it all in a 3-hour course. I couldn't sum it up for you in a sentence or two or 10 or 20 or 50 or 100. I couldn't sum it up to you in 100 sentences. But that's how I did it, to make it simple. It is probably one of the most valuable things that you should use as a trader because I have not found one form of technical analysis out there that will help you accurately call the top and bottoms of, anything with such accuracy and consistency. Let's talk about earnings. So this is a little bit interesting here, and we're going to go right into Square. Again, that's SQ. And what happens in Square here? What happens in Square here? And by the way, like I've really haven't been running a lot of the live algo courses. There's some great recordings, and they bring as much value. Definitely jump on it. It is a life-changing course. Again, I think you could get the recording cheap. I think it's like less than $100. I'm telling it for, like I make peanuts when you buy that course. T3 literally will send me a bag of peanuts if you purchase that course. I would inquire about it. Um, it's life changing. Okay, so let's talk about Square. $69.18. Just reach out to your trading counselor, info at t3live.com. All right, 69.12. I'm not going to post a link or anything for it because I don't know what it is, to be honest. I didn't do this show to promote it. Square down to 69.12 after hours. Pretty much dropped $4.50. It's down 4.50 at the moment, right off the highs. And I want to talk a little about Square and their earnings today and where I think a lot of this market is happening and what you're going to be seeing in the future. So I find it very funny how a lot of these companies with the market trading at all-time highs are missing analyst consensus. So they came out, Square, and they basically said 11 cents beats the 8 cents expected. Thumbs up, 489 million ahead of the 478 million. Thumbs up. But for next quarter, they say they're going to earn 14 to 16 cents versus the 19 cents expected. Not only that, they're going to make 545 to 555 million, which is an average of 550 million, versus the 555.5 million expected, so 5.5 million behind what the consensus revenue is. Now, you might say that, what's the big deal? Mark, they're making 550 million on average, let's say, based on their own, right out of the horse's mouth, their projections. What is the big deal that you just lose by 1%? 5.5 million is actually exactly to the penny 1% of 550 million. So what's the big deal? What you are seeing is a dominant monopolization by the largest companies in the world. I know in America it's very hard to use the word monopoly, especially when you're not referring to a board game. But what a monopoly is, and I literally had to go because I wanted the textbook definition, so I literally pulled it up. What a monopoly is it's the exclusive possession or control of the supply of or trade in a commodity or service. So you might say, Mark, what are you getting at here? Well, if a company like Square in a booming market like we're in, where the biggest rally on so many metrics ever in known human history for the stock market, why would a company like Square all of a sudden be missing future expectations? There's only one reason. Other companies are encroaching upon their space. And I am telling you, when these companies get encroached upon, it tends to be a downhill battle. It tends to be a battle that you can never pick yourself up from. I want to remind you of something. Do you guys remember back in the day when there were rumors that Amazon was going to be selling food? I kid you not. Remember back in was it 2017? Amazon was going to start. Here's a monthly of Costco. Amazon is going to start selling food online. And Costco went from 183 to 150 bucks off of that news before finally coming back when people had to realize that the people who shop at Costco buy in bulk and they're not looking to buy their produce online. The thought of Amazon competing with a Costco was enough to plummet the stock. Now you're telling me, are you really telling me when you have a company like Square, which you have so many services now, Apple Pay, PayPal, what was it, Vimeo or whatever, there's dozens of them. Now what's going to eventually happen is it comes to simple users. And people are underestimating how powerful it is to have so many users. Now, let me explain to you what I mean by that. When you go on Facebook, there's what? A billion and a half, 2 billion people. I don't even care about the exact numbers. It's a large percentage of the world population. Why don't we leave it like that? Apple, people who are using Apple services and products. It's a large percentage of the world population. Google, large percentage of services and monetization, large percentage of the world population. Now, why is that different than what it used to be? The funny thing was, when we were dealing with the tech bubble, I was a trader back in 99 when I started. When we were dealing with the tech bubble, then you were dealing with companies that might be the wave of the future, and they were popping up all over the place, and they were trying to put a dominant foothold in the market. Does anybody remember the browser Excite? Or what was the one with the little dog? The little dog with an R, maybe? I don't even remember the name. Does anyone remember MySpace? What happens is once these companies get gotten, I know MySpace sold for $1 billion, whatever dollars, but like once these companies get gobbled up, you're going to have a monopolization. I do not see Square being able to survive in this environment. I don't think people are going to want to pull out their little Square things. How many times are you in a cab, especially when you're in a different country, or maybe even this country sometimes, where they'll pull out and you'll take out your credit card and you'll give it to the guy and they'll have a little click in their phone and they'll scan it on their phone and they'll give you their phone and you'll type in a tip amount or whatever. That's going to be caveman type stuff in the future. It's already happening. Now there's just going to be like, you have Apple Pay? You have Apple Pay? Okay, I'm not letting you go near my phone. I'm not giving you anything. Boop, 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 boop. Okay, you received it? You received it? Good. Have a nice day. That's how it's going to be. And if you think people are going to be pulling out their little Square chip readers and plugging them in, you are mistaken. Yes, it will still happen, but companies like this, I know it only seems slightly negative, the news. I know the earnings seem only slightly negative on projections, but you have to understand that this company is not an Apple. This company is not an Apple. They're not going to bounce back with 10 new products or new products that are just going everybody's going to buy. These guys are fighting an uphill battle, and they're going to have to break through the likes of the Facebooks if they ever want to do a Facebook pay option, the Amazons, they're going to have to compete with that. And I don't really see them doing it. I think when these companies start to show a whiff of bad earnings, not all companies, a whiff of bad earnings, it's an uphill battle. Take Apple, for example, who dropped the boat on their iPhone sales, and their iPhone sales are going like this. Apple might be able to reverse that and get those back up again. Square is not going to be able to convince more people that they should be using their Square readers when Apple's going to come out with an Apple Pay and all these other companies are going to come out with payment services. Companies like this are done for. Now, that doesn't mean they necessarily fully depreciate in value, but I'll tell you this. You want to be a long-term investor in Square, what you are betting on is somebody who wants to enter the space who is smarter than you, buys you out so they don't have to spend all the money to get to where you are. I mean, Square is a $31 billion company. I do not see that lasting long. Square loses money. And if you remember what I was saying on companies that lose money that suck, I was referring to Tesla. You could see the CEO smoking a spliff with Joe Rogan. Idiot. You could see the CEO of Tesla swearing that his company is going to be profitable next quarter for the last, 5 years, and never is. The market isn't going to show appreciation for companies that lose money. Tesla is a $40 billion company. Tesla should be a $30 stock with going to zero until someone buys them out. To me, Tesla, you know what Tesla is? You know what? Pretend I am Tesla. Now, what I do is I take a sharp object and I go down my wrist and I pop 150 blood thinners. And I just sit there and I'm just hemorrhaging out. Analogically, that's money. And I just see it hemorrhaging and hemorrhaging. And I go to all these banks and I'm like, hey, could you just stitch me up a little here? Stitch me up, stitch me up. And they stitch me up and the bleeding slows down. And then next quarter of earnings come and pooh, all the sutures, all the stitches, the fact that I was sutured up and stitched up just pops right open. I start hemorrhaging again. And I'm like, guys, I need you to stitch me up again. Let's stitch it up. Don't worry, guys. I'm Elon Musk. This wound is never gonna open again. Uh-oh, next quarter, poof, poof, poof. Oh no, I'm hemorrhaging again. Wall Street is not going to love garbage companies like Tesla. I love the Tesla car. It looks great. I love Elon Musk. He's a genius. That's not what I'm talking about. I'm talking about the actual company because I have seen it before. I have seen companies that were supposed to be the wave of the future and might be the wave of the future and go bankrupt. You don't believe me? Yeah, okay, I'll prove it to you right now. Don't take my don't take my word for it. You ready? Watch this. Do you remember there was a time? Now, bear with me. Bear with me. I want to bring you to a time long, long ago. Like 2014, 5 years ago, where the future of humanity was going to be 3D printing and they were going to be able to send protein molecules and print burgers for you. And some of these companies actually charged you like a ton of money for a 3D printed like burger, and you could have paid like they even had like a 3D printed burger press, and you could even like see YouTube videos. Like they make like these YouTube videos right here, and they make like burgers, and these are like 3D printed burgers out of a press. It's like the most disgusting thing ever. But you know what? 3D couldn't make a damn dime if their lives depended on it. 3D could not make money. Remember 3D Systems? Here's a monthly. Back in 2014, this was a $97.28 stock. That's after hitting a 2-for-1 split, after hitting a 3-for-2 split. So this was almost $300 pre-split. And look what happened. Wah, 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 wah. Why? Because people had all this hype. It's the wave of the future. You know what? I still think 3D printing is the wave of the future. Doesn't mean you should own 3D systems. I still think electric cars are the wave of the future. That does not mean you should own Tesla. I still think credit card processing and easy pay is the wave of the future, and you should not own Square. And that's the bottom line. Don't confuse hype with monetary stupidity. Do not confuse hype with monetary stupidity. Now, there's some things that don't apply to this, like biotech stocks that are always floating to zero. And then you're just waiting and sitting and saying, well, if the study comes one day, they'll just go up through the roof. This is not that. These are losing companies. But when you look at an Apple and you're trying to justify Apple, which was over $1 trillion today, closed a little below it. I'll take you back to the daily of Apple. Was a bit over $1 trillion today, closed below it. Apple has a $17 P ratio. They earn $12 for every one of these shares profitably. They have a $3 yearly dividend or $2.92. I don't know. They updated it, whatever. That's Apple. That company is going to last. Now, many people don't realize how much money Facebook makes. Facebook has a $28 PE ratio. Facebook makes bank for each one of these shares a year. Facebook, at the moment, is averaging $6.74. That makes sense. Now we have a company called Netflix who brings amazing content. They have a $135 P ratio. So for every $378 share you own, they're earning $2.80. Doesn't sound as attractive as Facebook and Apple. How about Amazon, growth company? For every one of these Amazon $1,911 shares, they're earning $23.95 per share, putting it at an approximate $80 P ratio. No, I'm not here to talk fundamental analysis with PE ratios, and I guess I might as well go Google, a search engine, which has a $29 PE ratio after today. But when you show me a company like Square and Their earnings, they lose 9 cents for every one of these shares, and they're valuating this garbage at $31 billion. My God, who the hell would want to own this company long term? Now, maybe they get bought out, and maybe the company comes out and says, you know what? You guys do suck at monetizing on it. We want your customers. We want your technology. We want your patents. We're going to pay you $110 a share. We'll take you out. And that could happen. But until that happens, you are dealing with another Snapchat. Another company that I put a $0 target on before the IPO, and they plummeted and plummeted and plummeted because they cannot make money. You want to know another company I put a $0 target on before the IPO? Lyft. Lyft. Are you crazy? It's an app that hails a cab for you. This thing is now at $16.8 billion, was about 50% higher on IPO day, more than 50% higher on IPO day than where it is now. This company is worth zero. Now, they could change that. Maybe they want to do a deal with Tesla where they'll be, remoting around electronic vehicles and they won't have to pay, their drivers anymore, and then the company could become profitable. You know how much money, what do you think? Without looking it up, I'll give you one guess. I'll ask the Newsbeat live room. Type it in the comment section if you want. How much money do you think Lyft loses for every one of these $58.75 shares they have? How much do you think they lose a year with it? Take a guess. Don't look it up. I looked it up. I cheated. How much money are they losing per share? No, Wilson, they're not losing $1,200 per share, but that would be awesome. Nothing? Nope, that's not right. $12 more. Okay. They are losing $43 a share. All right, to put things into perspective, it's a $16.797 billion company. So let's do this. So they're trading at 58.75. I just want to show you the math. Okay. What is it? $43.04 they lose per share. And is that divided by 58.75, the price of the share? And you get 0.73, blah, 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 blah. And then you times that by 16.797 for billions. And this year, for 12 months, these shares, you ready? These shares are going to lose $12.3 billion at this rate, minus anything miraculous changing, and it could get worse or better. So it's a $16.8 billion company, but $12.3 billion are going to be lost this year. How do they allow this garbage on the market? And now you're going to come out with Uber? Maybe Uber is different. I don't know. But what's going to happen? Here's my point. All right, people like Uber, blah, 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 it's a cab ride hailing service. I get it. They can never lose money on they can never lose money on their employees because they eat what they shoot, type of hunter mentality. You eat what you shoot. But like you look at some of these companies and people are like, yeah, I use Uber. I want to buy Uber. And I look at them and I'm like, face palm. I'm like, you are now look, you want to trade Uber, maybe it triples, quadruples in value and then goes down. I don't know. I'm not saying you can't trade these names. I'm talking fundamentally long term on some of these companies. And when I look at Square, even though they're not losing a lot right now, I think it's more likely to get worse before it gets better. And they're not even down that much. What are they down for? A little less than $4.50. I mean, and I'm blowing up on the company. I just see the bigger companies monopolizing what they are making money on. You even see it now. How many companies can really compete with Apple? No one. Don't tell me Samsung competes with Apple. Yes, they sell more phones than Apple. Don't tell me they compete more than Apple. Because people who own an Apple phone, you know what they're going to do? They're going to buy another Apple phone. They're not going to switch over to Samsung. Just as many people, I would say, would go from Samsung to Apple as from Apple to Samsung. People, they have a cult type loyalty. There are people out there who tattoo the Apple insignia, I'm not going to pull up a Google image search, on their body. It's a cult. They are buying the next Apple product, whether it's great or it sucks, but they're going to own it. It's a status symbol, especially in other countries outside the US, like China. You drop an iPhone, it's a status symbol. It's like you pulling up in a fancy car. It's like owning an iPhone is a status symbol over there. So, no, there's a certain limit where you cannot compete with Apple. It's almost like taking one of these luxury jewelry stores like Tiffany's and saying that the diamond store in the mall is a competitor to them. No, it isn't. Yes, they sell the same stuff, but Tiffany's will charge 50 times more, get away with it, make more money, and sell more than you. All of a sudden, it's not the same. So when I look at a Square, what's going to happen is all these companies are going to do what they do better, and they're going to get knocked around out of the way. I mean, you even see people who are not letting Netflix catch a breath of fresh air. Amazon Prime, Disney. Why do you think Disney has been exploding up? You know why? You know why Disney exploded up right here? Hey guys, we're going to compete with Netflix, is pretty much what they said in a nutshell. Oh, whoops. Did Netflix go down? No, but Disney went up. Because Disney will be able to sell subscriptions. It's Walt Disney, for God's sake. Square, nobody gives a you know what about Square. People love Mickey Mouse. People love Apple products. People love their Facebook. People don't give a you know what about Square. And you know what? The numbers reflect it. The numbers reflect it. Tougher times ahead. Okay. What were we going through? We have more to actually offer you. Okay, so we're doing a new strategy here today. I know people are like this. You have to evolve with the market. That's part of what being a Newsbeat bandit is all about, is finding new strategies that work with the market. So as a Newsbeat Live member, we actually disclosed a new strategy that I actually haven't backtested this one because I wanted to try it while the earnings season was hot. To backtest, it'll take me a week to, have the person run the backtest for me properly. But I just wanted to show you what we did in Apple today. We literally bought right here in the middle of that bar where it says enter. We had a very tight stop and we rode Apple up. I mean, I sold out relatively early, but the stock pretty much exploded up in our faces and we were able to make good money on it. And I was very happy. Excuse me, I was very happy with the Apple trade. And we've been doing these things that have been working, especially on earnings names. Another thing that we did here today was we shorted Garmin, and that was right over here on a 5-minute chart. Garmin, we caught this little bear flag to the downside. We were up money instantly. Some people made more money than me in the room. I always find it funny when the guru is like the top 3 trader in the room. I am not the top 3 most profitable trader. I am not the top 20th profitable trader in my room. There are traders in our room who are making, I don't even want to say, but it's like, let's just put it this way, because for disclosure purposes and T3, with the numbers and the things, and again, I respect what they're trying to do there. Let's put it this way. I believe it's in the 8-figure range, the mid 8-figure range, like 30, 40, 50 million. That's what happens when you're managing large sums of money. There are people in our room who make way, way, way more money than I do. And I'm proud of that. I'm actually very proud of that. Because people look up to me, some people who come in like, oh, you're the authority, you're doing so well, you're making all these tens and tens and tens and tens and tens and tens of thousands of dollars every month. Wow, you're amazing, Mark. And I'm like, well, thank you, but there are people who are making me look like a newbie in terms of profitability, not in terms of consistency. I mean, I hold my own on that aspect, but number wise, there are people who do much better than me. And we have this new strategy now. And it's funny, and we shorted Garmin right here, and we caught it to the downside, and we rode the short down. And it's a new strategy, and it worked well today, and it felt good. And if you're a Newsbeat Live member, we have a full video for you. But I do want to say this. I really want to say this, that the market is all about changing to the environment. You have to always learn something new. The problem with a lot of people out there is they'll try the same old tired thing again and again and again and again, and they'll never adapt, they'll never evolve, they'll never change, and the results will ultimately reflect it. You could be in the Newsbeat live room tomorrow. You could see the way we are changing and that we're going to trade all these new earnings names and so much more, and you could be part of it. How about tomorrow's levels today? Because, nailing the dead top of the spiders today wasn't enough. You want to know where the market could top out or bottom out tomorrow. Well, here are the levels. We give you the Qs, spiders, IWM, which is the Russell 2000 ETF. Oh, just as a side note, like we do it so often, like to me it just sort of like it doesn't even hit me like anymore. Somebody just reminded me, like, Mark, like, I got an email, some dude made a ton of money in the IWM today, and I'm like, what the heck did you do? He's like, what did you think I did? I simply just bought your IWM support. So the IWM support from yesterday, just so you know, was right over here. This is for May 1st, which is today, which we give you yesterday. You can watch the Newsbeat show. We gave you 156.78 as IWM support right over here. Take a look at the IWM today, ladies and gentlemen. Low, 156.71. What did we give you? 156.78. The dead low of the IWM. The dead top of the spiders. So back to the levels. These levels don't always hit. In fact, they usually don't. But when they do, as a Newsbeat Live member, you will get alerted to it. If you're not a Newsbeat Live member, you could set an alert any way that you know how to or like to do. I tend to be able to have an easy time making money when I buy shares or calls off support. And I have an easy time making money when I short shares or buy puts above resistance. Copy them down. Don't tattoo them on your face because they will change every single day. And with so many cool things and cool consistent strategies that people are just calm, relaxed, making money, not stressed, not suffering psychological toxicity. You know how many? It's kind of funny. I got an email. I don't want to share it right now. I'll maybe if you remind me to share it throughout the week. Somebody actually says you cured my depression. I I kid you not. The person reached out to me, said to me that he was on antidepressants, he was on medication, he couldn't snap out of it. He was a trader for a long time and he was suffering. He was diagnosed and suffering with major clinical depression, major depression. And he says, once I joined your room, 3 months later, I was off my meds. I told him to go check in with his doctor. Of course, he laughed at me. He doesn't suffer from depression anymore. And I'm like, I'm assuming you're making money. And he's like, that's not the reason why I'm not suffering from depression with you. He's like, I'm making money consistently and I'm happier and I'm a happier person. He said, my wife notices a night and day change in his attitude since he's joined the Newsbeat Live service. Stories like that is what gets me up out of bed every morning. Stories like that is the encouragement for me, striving to keep trying to help the next trader get from slowly bleeding or quickly bleeding money back on the right track again to making money. Is there any doubt in your mind? Is it very easy to see why the Newsbeat Live Room is T3's #1 largest, fastest growing trading room? Happy trading, make money. I'll see you guys tomorrow on the Newsbeat Live trading broadcast. Have a wonderful evening.